What's going on, guys? My name is Richard, and welcome back to the Stock Market Outlook video. We'll be covering a lot today, including all the charts of the market leaders, the action of the major indexes. We'll also talk about how my previous watchlist performed over this past week, and we'll also cover a few different sentiment indicators, including my surveys on Twitter, the put-call ratio, bulls versus bears poll, and we'll also talk about the most recent IBD Big Picture article, and also the Wishing Wealth GMI Signal. So we'll be covering a lot today, so feel free to jump around using the timestamps. And if you find my analysis helpful, please go ahead and leave a like down below and subscribe if you're looking forward to more videos just like this one every single week. And a quick note before we get started, I usually talk about my trades over this past week. This week, I decided to kind of make that a completely separate video, which will be linked above right now. But starting things off, let's go over to the potential true market leaders and start with AMD. So overall at this moment, it is below, and let me hide these drawings here. It is below all the key moving averages, the 50 SMA, the 21 EMA, 10 EMA, and also 65 EMA. And all of those are trending down at this point. So it's in a very weak position, although it could be forming a double bottom base. So keep an eye on this low right here. Next up, we've got apps, another former leader. And overall, you can see it's decreased sharply from this top on the 14th and has sliced through the 50-day moving average. And it looks like it just found support here at the 65 EMA. So keep an eye on that for a bounce and potentially could be forming the low of a base here. Although I would expect some back and forth here near these key moving averages, potentially until the shorter term ones kind of catch up to the price. Next up, we've got CALX, a recent gap up on earnings. And let me actually show the drawings here. You can see the green line was the former all-time high set all the way back in, let's see, about 2011 or so. So this was a significant breakout. And so far, it's just pulling back to that support level. So I would expect that it kind of forms some tight action here, potentially kind of moves up from that point in the near future. So next up, we've got CrowdStrike. And overall, you can see that this has had some significant weakness since this intermediate top on the 14th as well. And overall, it declined sharply to the 50 SMA, moved through that decisively on Thursday, and then really found some weakness on Friday, although you do have a pretty strong close. So once again, this could be the start of the kind of bottom of the space here, but I wouldn't expect this to dramatically increase right back to all-time highs very quickly. Most of these leaders kind of need some time to consolidate these huge moves, so I would expect some new bases to form. And eventually they'll either break out once again or kind of be replaced by new upcoming leaders. So that is CrowdStrike. And next up, we've got DDOG. And you've got a similar story here. You can see it peaked around the 14th or the 12th of October. And since then decreased and sliced through the 65 EMA and 50 SMA, which is a huge sign of weakness. And at this point, it's kind of lost this pivot support level. So it could be forming an entirely new base altogether. ENPH, one of the solar stocks, has been holding up relatively well, and you can see it's really near the 21 EMA at this point. So overall, I would expect it to kind of continue to go sideways or even decrease a bit until the overall market pressure is lifted, potentially after the election. So next up, we've got Etsy, which really reacted negatively to a blowout earnings report, and that really is very telling that it kind of sold off after such a strong performance over that quarter, and that suggests that hedge funds aren't prepared to buy it at these levels, especially since it's had such a strong run. So it probably is just forming another base, but you've got to wait until that happens if you are a position or swing type trader. So overall, you can see it's now down below the 50 SMA and 65 EMA on above average volume. So at this point, it's a no touch from me. So next up, we've got XP or XP World Holdings. And overall, you can see it decreased very sharply through the 50 SMA, but it has found support at the 65 EMA and now just kind of bouncing back and forth, potentially forming a bottom of a base right here. So this is still one to watch, and I'll be looking to see if you can retake this 50 SMA on above average volume. So moving on, we've got FSLR, another recent earnings gap up, and overall, it did take out the low of the earnings gap up day, but so far has found support at the kind of top of the previous consolidation here. And you had a nice kind of hammer on this Friday, really showing some strength after it touched the 21 EMA. So definitely one to keep an eye on. And the solar stocks in general are still holding up very well. And if Biden is elected, likely they will continue on with their uptrends. So moving on, we've got Fiverr, and overall you can see that it has sliced through the 21 EMA, but is still holding above the 50 SMA and had a nice kind of bounce here after it touched the 10-week moving average. And so far is still kind of consolidating in between the 21 EMA and 50 SMA. So you really want to see it stay above this key level, the 50 SMA, and eventually form another sideways consolidation here and eventually challenge these all-time highs. So moving on, we've got LVGO, which traded for its last time this past Thursday. It is now fully merged with TDOC, but overall you can see it's right at all-time highs. You've got a nice long-term consolidation, so I'll be watching TDOC very closely. Moving on, we've got NET, which is holding up very, very well, and overall I've drawn this downward trend line here with an alert set if it breaks that. And overall, it's right near the 21 EMA, which is a sign of strength, so hopefully we can see a bounce and eventually a flatten out and then move up from this kind of downtrend and downward flag here. And overall, this is probably one of the top 3 stocks on my list, along with NEO and also PINs that I'll be watching very, very closely once the market resumes its uptrend. So next up, we've got NEO, as I said, which is one of the top stocks I'm watching. And overall, you had a breakout on Thursday and then a nice consolidation day on Friday. So it's doing nothing wrong, but at this time, it's kind of a little bit risky or too risky for me to be entering this stock given the overall weak market conditions. So next up, we've got NLS, which is similar to Peloton. And overall, this has been in a very, very strong uptrend and has just pulled back for the first time really below its 21 EMA for quite a while since this consolidation here. So you could have a base forming here if it goes down and touches the 50 SMA. I would not be surprised if it does that. But overall, this is definitely one to watch given the very strong prior uptrend. And you can see it's kind of hitting an obvious resistance point at about 25 or so, which is the highs of this previous move here in 2016. So overall, given the conditions, definitely want to keep an eye on as it forms this base and potentially breaks out above these all-time highs. So next up, we've got NVDA, and you can see it's potentially found support here at the 65 EMA, but overall you can see this is quite a severe downtrend, and I want to see this flatten out, form a tight base, and then approach new all-time highs before I would consider entering this stock. Moving on, we've got PINs, which had a strong gap up day on its very outstanding earnings report, and overall you can see it has taken out the low of the gap up day, but that's kind of understandable given the weak market in general. And I love the volume coming in on this day, the 29th. So overall, definitely one to watch as it moves down and consolidates this move and hopefully can stay tight and kind of go sideways from here. But I wouldn't be surprised if it closes this gap here and finds support at the high about 53.87. So next up, we've got Peloton, similar to NLS, which has been on an astounding run here. So I wouldn't be surprised if it touches the 50 SMA for the first time during this entire run. And that point is usually a good buying opportunity. So look for a bounce off that moving average. But overall, this definitely needs a base to form and consolidate this huge move that's had. So next up, we've got ROKU. And overall, it was acting very, very well until this Friday, holding above that 21 EMA. But then you can see it got hit hard, down 7% on this past Friday. And likely this will touch at least the 50 SMA, potentially slicing through that. And overall, you've got a very strong support level at the prior green line, which is at 177.50. So if it does break through those key moving averages, you could expect some support at that level. So next up, we've got SC Limited. And overall, this has been pretty much going sideways and showing a little bit of relative strength, honestly. And it is holding above that 50 SMA, although it touched it on Friday. So I would like to see it kind of go sideways from here and not approach that 65 EMA. But overall, given the market, I wouldn't be surprised if it does that either. So next up, we've got another solar stock. We've got SEDG, and overall, it's in between the 21 EMA and 50 SMA. You can see that the lower time frame moving averages are sloping down at this point, which is a negative. But overall, it is hanging above these key moving averages, which is a positive. So once again, definitely a name to watch in the solar space. Moving on, we've got SHOP, and this is another example of a bad reaction to earnings. And you can see that on this day, it tried to move up, but then had a very bearish candle closing below all the key moving averages. And if we flip this chart over, it basically looks like a breakout, but it's breaking out the wrong way at this point. It's breaking down rather, and I wouldn't be touching this at this point. And you got to wait for it to form potentially a double bottom here using this low as the prior low. So next up, we've got Snap, which also has been hanging in there beautifully. And overall, after this earnings gap up, you saw increased demand the 2 next days, which is a very strong positive on volume as well. And so far during this correction, it's pretty much gone just sideways, which is showing a lot of relative strength as hanging above that 10 EMA. So there's definitely one of the stocks that I'm looking at very, very closely once the overall market resumes the uptrend. So next up, we've got SQ, and overall, you had a very bad day on Friday. It was holding up and kind of finding support at the 50 SMA, but it sliced through that key level and the 65 EMA on Friday on above average volume, which is a very bearish sign. So overall, this stock needs time, and I'd be waiting for it to consolidate and form another base before looking for an entry. So next up, we've got TDOC, and overall, you can see that we had a very bearish day on Friday, and it basically undercut all these lows down here during this consolidation and is approaching the bottom of this short-term base. So overall, this is a promising company, but you have to wait until the price action confirms your thesis before entering in a trade. So overall, I'll be watching this, but I don't expect a good entry anytime soon. So moving on, we've got Tesla. And once again, this is another example of a major growth stock finding support at the 65 EMA after breaking through the 50 SMA, which is a trick that I learned from Traderline. So overall, from this bar, the expectation is we go lower, but I wouldn't be surprised if we kind of go sideways here, potentially gradually move down to these lows before kind of forming out this flat base with a pivot of 502.49. So next up, we've got TDD, which also had been hanging in there very, very well, just like ROKU, until this past Friday. And overall, you've got a very negative candle here, finishing right at the low on higher volume. And I would expect this to touch its 50 SMA or at least go sideways before challenging these all-time highs. But in general, I think the stock is holding up relatively well, and I'll be watching this one closely. So moving on, we've got TWLO, which is below its 21 EMA, but above the 50 SMA and 65 EMA. So once again, it's showing relative strength, although not excellent relative strength. And I think it needs more time as it kind of revisits this pivot at about the 280, 275 level. So that is TWLO. And lastly, we've got Zoom. And overall, you can see it finally broke below the 21 EMA and looks like it's going to revisit the 50 SMA. So overall, this could kind of form up another base and have another run, but you have to make sure you don't fall in love with the stock and just buy it because it has performed excellently this year. You have to wait for the price action to confirm a setup and a quality base. So that is a quick run through of the true market leaders. And tomorrow I'm going to be going through a ton of charts. So if you have any stocks that you'd like me to take a look at and kind of get my take on, just let me know down below in the comment section. And I'll also be asking on Twitter for names you guys want me to review. So if you have any tickers, just let me know down below in the comment section. So moving on with our market analysis, let's talk about the major indexes and start with the QQQ on a daily time frame. So first, looking at the end of last week, you had a nice hammer bar, and overall it appeared we found support at the kind of 21 EMA and also the 50 SMA, but then you had a negative expectation breaker on Monday, and you can see we had wild action finishing near the 50 SMA, but still below it, and very wide ranges suggesting increased volatility in the near future. And then on Tuesday, we had a positive day. You had a slight gap up and a hold and overall an inside day. But then on Wednesday, things really fell apart. We had a huge gap down and then it finished right near the lows on above average volume. And then Thursday was just kind of a reaction day to the prior day. It was an up day, but overall still there was a lot of volatility and weakness in growth stocks. And then on Friday, things really fell apart on the indexes. And now they're all below those key moving averages. So the expectation from this last bar is we go sideways or lower, potentially finding support at this level right here, or potentially right here because this does line up with the top of this consolidation here. But overall, you have to take it day by day and be ready for anything. And personally, I'll be waiting for a fall through day, either on the NASDAQ or the S&P 500. And if you don't know what a fall through day is, I have made a video completely on that concept, which is very useful. So go ahead and check that out. The link will be above right now. So moving on to a weekly chart of the QQQ, you can see we had a very bearish week. We were down 5.39% with a weekly closing range of 12.7% and a daily closing range on Friday of 28.3%. And we now have an up-down volume of less than 1. And overall, we are below the key 10-week moving average, although we are above an increasing 30-week, So at this moment, we are in a stage 1. So now looking at the SPY, you can see it's a bit weaker than the QQQ, and you have a big gap right here. But overall, it does seem to be finding support at the September lows. But if it breaks through that, really be ready for a larger correction. And taking a look at the weekly chart, you can see that overall, it was down 5.56% with a weekly closing range of 19.3% and a daily closing range on Friday of 55.6%. And it also has the up-down volume ratio of less than 1. Next up, we've got the IWM, the Russell 2000 index, and overall you can see that we had another big gap down on this past Wednesday, and overall it's back in this kind of longer term consolidation. And from this last bar, the expectation is we go sideways or lower. And going to a weekly chart, you can see that we are in a stage 1 at this time, and you can see that it's below the 10-week moving average, but it is above an increasing 30-week moving average. So next up, we've got the DIA, the Dow Jones, which is also in a stage 1, although you can see it's fallen all the way to the 30-week moving average. So it is very critical that it stays above that level. And next up, we've got GLD Gold, which is also in a stage 1 below the 10-week, which is decreasing, but above an increasing 30-week. And next up, we've got the XLF, the financials, which you can see have been very, very weak overall this year. And at this point, it is finding support potentially at the 30-week, but overall, there are a lot of flaws in this chart. And next up, we've got the FFTY, the Innovator IBD 50 ETF. And overall, you can see this reflects the weakness in the leading names. It's below the 10-week moving average, which is decreasing, but it is above the rising 30-week, so it is in a stage 1 at this time. So the last market index is the VIX, and overall you can see we're up 38% this week, which really suggests a negative change in the environment for traders. And it's definitely best to kind of, as soon as this gets above 30, 35, and approaches 40, to kind of trade smaller and be more selective with your investments. So overall, you've got a pretty negative picture from all the market indexes. And personally, I'll be waiting for that key fall through day before really dipping my toe back into the market. So that is it for those indexes. And let's move on to my last watch list. So we've talked about a lot of the stocks already on this list, but overall you can see they were all red this past week, which shows the kind of bad conditions for growth stock trading at this time. But overall, Tesla, we already talked about. Sale kind of broke down from that 3-week type pattern and is potentially finding support at the 50 SMA. So you could play a bounce off that. But overall, personally, I wouldn't take this trade because it's fallen very sharply to that moving average, and also because the overall market conditions are poor. ZI as well was showing some relative strength in the short-term kind of IPO consolidation here, but once again, it also fell below the 50 SMA, although you can see it recovered quite a bit from the lows. So at this point, there's no clear setup for me. So next up, we've got Zoom, which we already covered, NVIDIA, SE, SQ, we already covered. Coupa Software, you can see gap down below the 50 SMA. So once again, this is on my no trade list at this point. You have to wait for a proper setup. You don't want to be trying to guess a bottom in these high flying growth names because that is a sure way to take a lot of losses very quickly. AMWL, the recent IPO, you can see is still kind of forming up. And overall, you can see it lost the support of the 21 EMA, which is what I saw last week on Friday. And overall, I wouldn't be surprised if it goes all the way back to the IPO price. Net we already covered, Peloton we already covered, TTD, ROKU, TAN is the solar ETF, and overall this is hanging in there along with the growth names in solar. So once again, one to watch for a potential move next week after the election. DDOG, you can see we already covered, but it is looking very negative at this time. And lastly, we've got RH, which once again is moving below the 50 SMA on above average volume. Although it's not above the 50-day moving average, it is above the kind of recent days here. So once again, I think this setup is void at this point, although it has filled this gap. So you could look for a kind of flat base to form with the high of 410.49 being the pivot. So overall, a bad performance for my watch list given the overall market conditions. And tomorrow, given that we are in a correction, I won't be giving out another watch list, but I will be talking about the stocks that are showing the strongest RS, which I'm watching very, very closely, like NET and also Snap. So make sure you guys tune in for that. And now let's move on to sentiment. So overall, looking at my surveys, you can see we had a big drop this week, down from 50.9% to 44.5%, which is reassuring. And we also have a big jump in people who are bearish at this point, which I think is very, very encouraging as well. And moving on to the put call ratio, you can see it's moving in the right direction. Well, it's not quite at that 1.15 level. That does suggest that we found an intermediate bottom. Next up, we've got the bulls versus bears poll, and overall this doesn't reflect the market weakness at all, and we're still at above 60. And if we go to the NAAIM exposure index, you can see we're now down to 77.87, down from about 102 a few weeks ago. So I do think this is very encouraging, and if this is a true contrarian indicator, that could mean that we bottom relatively soon. So next up, let's talk about the IBD Big Picture article, and overall the headline is stock market sell pushes rally over the edge, Amazon, Apple, Facebook, and Tesla dive. And reading through the article, they discuss the weak action on this past Friday, with the NASDAQ composite diving 3.25% before kind of recovering a little bit of that, and also the FFTY down 2.65% on Friday as well. And overall, they talk about how we're now in a stock market in correction, according to them, because of the weakness in the overall indexes and also the weakness in the leading stocks. And lastly, they discuss how you can potentially find the next uptrends leaders by taking a look at their relative strength lines and looking for stocks that are bucking the overall trend. And I will be making a video about that and how to add the relative strength line into TC2000 very, very shortly. So keep an eye out for that. But overall, according to IBD, very, very weak action. And their current outlook is a market in correction. So moving on to the GMI Signal, you can see it still is green, but Dr. Wish hasn't updated it for Friday. And likely we are now in a red GMI Signal. So overall, taking everything into account, my current view is we are in a market in correction, and I'll be waiting for a clear red, white, blue uptrend on the QQQ and also a fall through day before I really increase my exposure and buy new opportunities. So I hope you guys enjoyed this video, and if you did, please go ahead and leave a like down below and subscribe if you're new to the channel. And I'll see you guys in future videos.